Hello everyone, and welcome to today's session about ASEAN project and Asia project outlook. Thank you for joining us today. Today I'll be joined with Jack. If
Hello,
Jack
everybody.
is in the call, perfect. So I see the numbers are popping up. So today we're going to discuss about Asia. Of course, we have already our next webinar, which is already planned. We'll send you, of course, the link to subscribe to it and register for it. And next session will be about the geopolitics and sovereignty, which, of course, in light of recent event and recent crises, is demonstrating once more that those aspects are more and more the drivers of energy projects. And the idea of the next session on May 12 would be to discuss, okay, how much those political events and crises are shaping project, deciding project, yes or no, because sometimes it completely cancel project and sometimes it creates also opportunities. So we'll send you everything with a slide. So you'll be able to register for it and join us mid-May. For today's agenda is quite simple. Of course, we'll discuss about the market news, what is happening, I would say linked to Asia. If you want to discuss Iran situation, maybe we'll take it at the end, like any question you may have on today's webinar. Then we'll discuss about the energy shift that we see happening in, and the energy demand that we see happening in Asia. Then, of course, we go down to projects because at some point we have to go to the business opportunities aspect of the regions. And then we have made some focus on specific countries, which of course is a bit different from one another. So if you have any question, feel free to pop directly into the conversation of this meeting. Okay, you can ask. There is also Q&A area where you can ask all the questions that you want. And from there, we'll address all the questions directly at the end. So stay with us after the presentation and we'll try to answer all of your interrogation. Jack, the floor is yours. I'll leave you start with the market news.
Thanks, Jean. Let's start with the market news. So all the events that are, let's say, impacting our world, and we will start without a Greek surprise with a brief view of the Strait of Hormuz. So before going into the details, and we're not tackling all the projects today, but we have to keep in mind that Asia is a big consumer of energy, not so much a big producer of oil and gas, meaning that already the supply was a sensitive topic for them. With what is happening last days in Iran, it's not more sensitive, it's a critical topic for them because it's their, let's say, their resources that is being cut. So I think that now everybody on the planet who listened to the news the last 12 days, they know that 20% of the oil is going through the Strait of Hormuz. That's a number that everybody knows. Just to provide a bit of perspective, on these 20 million barrels, 12 were going to Asia. So they are impacted not only on the price, but also on the supply of the product themselves. We already have some region of the world over there that are being cut because they don't have oil or gas. So some region of the world, basically, they don't have electricity anymore. So the impact on this crisis, how long it will last, that's the million-dollar question that today I don't have. But it can be something that is way worse already. It's already worse than what we had in Russia, where the problematic was only to reshuffle a bit the distribution. Okay. We put some figures also. You have the details of what is passing through the Strait of Hormuz and to where, but we wanted also to provide a bit of numbers regarding the level of the consumption of energy that they have in these countries. So we put, I would say, every type of resources, oil, gas, coal, everything into one pot, and we transform that into equivalent of barrel per oil. And you have here the number. So China is consuming nearly 20 billion equivalent of barrel per year. Okay, followed by India with a bit more than 6 billion. A teaser on the next slide. This number is not going down, and you will have that more in details in the slides. Then we wanted to look at some, let's say, specific items per country, starting with China. So China, they have in place what they call the Renewable Portfolio Standards, known also as RPS. It's not something new. It's in place since 2019. The basic idea is simple. It's to push the industry to use more and more green electricity. So by green, they mean solar, wind, hydro, biomass, whatever. But the thing that changed this year, especially in 2026, is that they toughen a bit the conditions. First of all, the level of green electricity they need to use, it's a bit complex to understand because it depends from a region to another in China. Basically, where they have the production of green electricity, the requirement is very high, up to 80% for some industries. And where there is less access to this green electricity, this percentage go down to 20-30% of requirements of green electricity. So that's the first thing that they changed this year, is they toughen and they put these requirements a bit higher. And what also they change a lot is that so far they could buy some green credit like we had in Europe. The problem that there were a bit some double countings. So technically they still can buy some credits. In reality, it's extremely difficult because they toughen the conditions. So it's extremely difficult to have this carbon credit to a point that they almost can't do it. And the consequences of that, if the industry is not following the standards, the level of green electricity requirements that they have, that obviously they get a fine. That's number one. But they also can have, there can be a negative impact on their social credit score, which is in China, it's something that is quite important, meaning that if you don't follow the regulations, first you get a fine, and then you get difficulties to get a loan on the bank. And that's a bit new in 2026. So this year is quite tough for these standards. And when you put that into parallel with the graph that you have on the right, the graph shows the following things. The first part is the total power in place. So you see that a bit more than 40% of the electricity there comes from thermal sources, and more than half comes from green electricity or renewable sources. But when you look at the reality, what comes out of the wire, it's a bit different. Okay, so thermal, it's something that is easy to manage. So here you have the total output. But when you look at green, you have hydraulic powers that also basically provide what they are supposed to. If you look at wind, if you have half of what is installed, you're happy. And if you look at solar, if you have 20%, you are more than happy. So you have this discrepancy between what is installed and supposed to have, what they really have. And on top of that, you have this contradiction with this RPS standards. Moving to another country in the region, also here, another example on how, let's say, politics can impact the business and the market. It's Australia with their gas reservation scheme. Here again, it's not something that popped up this year. It's live for some region of Australia for more than 20 years now. And the idea is quite simple. They produce gas, LNG, and they export a majority of that, and they have issues to secure their local needs. So there is, again, already depending on the areas, a part of the country where already applying a certain percentage of this LNG to be used locally. Now the government say we need to make this level at a global scale. They are still in discussions on the numbers, on the percentage they should keep. Figures goes between 50% to 25%. They are still in discussion, most likely to be 15%, meaning that 50% of the gas for the incoming projects, they should not go retroactive, but for the upcoming projects, 15% of the gas will need to be secured and used locally. If you put your shoes the other side, the receiving part, means that for the next project, a part of what you were needed will be not accessible to you because reserved for the Australians. And as we saw, and as we said, the rest of Asia, which is mainly coming where this gas is coming to, they were looking for every potential sources. Last thing before going a bit in the details of the region, we all know that I would say Asia is the home of petrochemical activities. But to provide a bit of background and a bit of numbers, if you look at the total demand of petrochemical projects, 40% of these projects are in Asia. And if you look at the capex, it's almost half, 46% of the investment of petrochemical are done in Asia. And the reason is simple. In this area, you have the three factors that is driving petrochemical project. Number one, the population, the consumer base. They have a large population in Asia. That's not new. Second, the standard of life that is growing. You know that when the standard of life is growing, people need more phone, a laptop, paint, whatever. So that drives the petrochemical demands. And the third factor that they have is that the industrialization over there is the opposite of Europe. It's going up. So all these industries needs refined products. I think we can go now in some more details with you, Jean, with the demand per country or per region.
Yeah, thank you, Jack, and thank you for this part. And of course, I would say following Iran impact, it has major, I would say, impact on energy prices, but not so much right now till on energy project. Of course, we'll monitor that through Project Smart Explorer, but that's quite important to have in mind that this is a short-term situation for the moment, and then it does not develop into medium term. But what is more long term is the energy demand, because of course, if you see some countries' energy demand going up and down, then of course it is driving project. And what is quite clear with Asia is that it's one of the most, or if not really, to be honest, the most dynamic region in terms of energy demand. And inside the Asian continent, we have four profiles, I would say, which are quite different in terms of energy demand. First, you have countries which have reached maturity quite a long time ago, like South Korea and Japan, which are, of course, really well-developed countries, and where the profile of energy demand is more or less stable. Okay, so we see new projects coming up, but not so much. To be honest, we see a little reorganization inside those two countries, but not seeing really crazy. Then the second situation is China by itself, because China has been on a hot run, I would say, on the last 30 years, maybe even more, and was skyrocketing for quite a long time. And now we're at the beginning of a period where China is going to slow down, and you will see in the figures that it is quite important. At the opposite, we see that India is starting to raise and is starting to take what we call the energy growth journey, that little bit like China was doing 20 years ago, 25 years ago. And behind India, that's more or less all the rest of Southeast Asia, which is following in the steps, a little bit behind in time, but following more or less the same curve. And what is quite driving, of course, Jack mentioned it, is the demography. Because at some point, sorry for the engineers in the call, but the energy demand at some point is quite matching the fact that you have a huge number of population. Of course, if the number of population grows, the demand for energy grows, but you have a second effect, which is standard of life. And as soon as the standard of life of a population grows, the consumption of energy grows. And for many countries in Southeast Asia and in India, you have both factors which are growing by themselves. So of course, the impact on energy is quite crazy. Just to give you the figures from OPEC, which made quite a fantastic report recently, was to say, okay, the biggest growth in terms of energy demand on the next 5 years is going to be first India, then the other, what they call other ASEAN countries, which is more or less Southeast Asia by itself, and both are in front of China. Okay, so you can imagine that today the dynamic really is passing from, I would say, China to the other regions and other countries of the Asian continent. Of course, far in front of Middle East, far in front of Latin America, and you see that Europe is lagging behind. So clearly, this change in energy demand is, of course, driving a project. If we go in the details, first China. I put a lot of graphs just to show you, but the few points are quite important. First, the total energy demand, and you see those are the projection from the International Energy Agency. You see that we're arriving to a kind of a plateau. Okay, the total energy demand in China is arriving to a plateau. And if you look inside the different stream of energy in China, more or less, you see at the bottom the oil demand is starting to peak. Okay, so we're at peak oil in China, and it's starting to decrease a little bit. You see, coal is will start to decline after 2030, okay, and start to decline quite dramatically. Of course, being replaced mostly by renewable energy and also a little bit replaced by natural gas. So overall, I would say the volume of energy will be stable, but you will have a shift into the production of energy in China, while coal will start to disappear, oil a little bit, and replaced by renewable and gas. And this is a little bit an energy transition, to be honest, because we have really this effect of replacement of one energy by another in terms of sources, and it's motivated by two things in China. First, the high level of adoption of electrical vehicle, which is quite unique on the planet, and second, also the I would say benchmark or economical viability of renewables in the country. I would say it's a little bit pushed because of course there is a lot of public subsidies to finance those projects in China, and the supply chain is all based in China. So of course, they are quite cheap projects to be done. But also, as Jack mentioned, on the other side, there is public policies that push you to invest in renewable more and more, with a lot of, I would say, fines if you're not doing it. So of course, it becomes quite profitable to go for renewables. But overall, the picture of energy in China is quite interesting because we're arriving today to maturity, which is of course having a huge impact on project as well. If you look at it in terms of energy demand, but from the other side, from India, here the situation is completely different because today we're at the beginning of a huge journey where we are more or less here, and the total demand for energy in India is going to double from today to 2050. More or less. Okay, will it double, precisely double, if it will be more than doubling or less? Okay, I don't know, but more or less that gives you the trajectory of project. And what is clear is that all the energy are needed to do it, because you see in the graph that coal is still going up today and still go up for the next 10 years. Same situation for oil, and oil will more or less start to stabilize with coal after 2035. Gas will grow to a certain extent, but not something completely crazy. What will really absorb the growth in terms of total energy demand will be renewables, but it will come after 2030, 2035, to be honest. So, which means that in terms of project and in terms of usage of energy, that there is no energy transition in sight. It's not really the situation now. It's purely energy addition, to be honest. And of course, if you look at behind this energy demand, what is really driving today the demand is industry, because India is starting to industrialize at fast pace, and of course it's calling for more energy, and it's not an arbitrage between one type of energy or another. So you can imagine, of course, as soon as the standard of life will start to grow, it will be massive because the population in India is quite massive as well. If we look at the rest of the countries in Southeast Asia, I put you the list on the left of all those countries that we consider. And of course, what is quite clear behind that, the growth is not going to double like in India, but it's still going to grow 50% in the next 25 years. And we are talking about hundreds of millions of people still. And we have to understand that most of the growth here on the next 25 years on those countries will be made by coal and by oil. Okay, so of course the energy transition here is not really problematic. We are purely into a population development scenario where we don't even see today a large growth of gas yet for different reasons. And what we clearly see that coal and oil are going to do most of the work. And while some countries like Indonesia can produce a little bit of oil and gas, of course it's way not enough, I would say, to absorb the increasing demand of energy. So as Jack mentioned, this situation where there is a kind of a challenge for Asia to import and to have this kind of weakness to import all of its energy is going to be worse, because of course the demand is accelerating so fast, and the sources of energy in Asia are already in production. So of course it's going to be worse and worse as the time goes on. But of course it gives you an idea about how much is the potential for project in those regions, because the appetite for energy is quite crazy, to be honest. Jack, I leave you the floor for the project outlook.
Thanks, Jean. Before we start, I suggest we look at the map of the area and see where are the investment. Basically, you have four spots in the region. The first one is India, and you see that the total investment over there is reaching almost 100 billion. To put in that, the full region, the full Asia Pacific is concentrating 272 billion. So more than 30% are done in India. The second hotspot is Indonesia, following with 68 billions. Then you have Papua New Guinea. It's very specific over there because there is a huge LNG projects and different phases that are happening there. And then you have China. One word on China. Obviously, the total investment in China are way higher. Here, what we are only considering, and that's applied to, let's say, the full database, not only for today, all the projects in China that are only reserved for Chinese and local manufacturers are not in our database, okay? So we only take here into consideration the projects that are accessible to the Western companies, so to you. So that's why, obviously, those 20 billions reflect that, and the 272 billions reflects also these tactics, okay? So basically, you have 4 hotspots in the company, in the region. Now, if you look at the let's say the forecast for the region, you see that we are arriving at a plateau the last years, and the next slide will even confirm it. And there is start to be a push in 2026, 2027. You're used to it. If it's going down after 28, 9, 30, don't panic. They are not going to close the region just because, obviously, the figures reflect the project that we have in the database. So the projects of 2030, they have not been awarded yet. But you see that over the last years, petrochemical demands had some difficulties to materialize. Now, with the elements that we provided before, they are, let's say, back even more stronger in the market. So that's the orange red part of the graph. Knowing that you also have in energy transition some projects that could be considered as petrochemical when you are looking at some new alternative fuel, but more or less that's it. It's pushing very hard for the following years. And if we look at what has been awarded so far, we have a bit of a similar situation where the region is arriving to a certain, let's say, plateau over the last years. It's hard to go above this glass ceiling. Keep in mind that this graph does not reflect the full region, but it's completely different from one country to another. That's what Jean explained. So when you have China going down and the rest of Asia going up, sum up the two, at the end, you have something that is flat. Doesn't mean that all the region or the countries are flat. Second, also, Asia is not isolated in the world. Every region every corner of the world is asking for more projects. Every corner of the world have their own specificities, LNG in America, energy transition in Europe, but everybody's asking for more with the same supply chain. So today, there is what you want, and at the end, there is what you get. And one of the consequences of that is already, we are not even done the first quarter of the year, and you see the backlog for 2026 is already almost full to 75% of this glass ceiling. Most probably, will go a bit higher than 2025, but clearly, what they want, what we saw on the previous slide, will not happen in 2026. 2027, it's already being filled up quite high for today. So more and more projects are being awarded in advance as any other region in the planet. Last slide, and then Jean will look a bit more in details into projects. If we look at the let's say the top application in the world, in the region, here you have the listing. So if you take on the 4 biggest application, you have refinery and ethylene crackers, refinery standalone, and ethylene cracker standalone. You sum up these 3, you have 51% of the investment of the region. So when we say that it's the home of petrochemicals, these 3 applications is clear. And then you have LNG and FPSO, still 20%, but as we said, the region is not so much a big producer of energy, more a consumer. Interestingly, also, and we said that energy transition is not really happening. It's energy addition. If you look, in Project Smart Explorer, you can extract power generation projects per type of fuel. The first one that come in the listing is a coal-fired. So we are far away here from the hydrogen-ready fire plant that we can have here in Europe. It's another world. And finally, before leaving again the floor to Jean, the country, if you look at, the region, is mainly driven by NOCs, so national oil companies. 60% of the projects are done for national oil company, which is not a big surprise for the region, and for the fact that, again, it is being driven by petrochemical activity, so for, let's say, a national reason. 32% of the rest are done by independent company, and international companies count for only a fraction of that. Only 8% of the projects are being done by the super majors over there.
Yeah, thank you, Jack. Now, if we go into the details of different countries, what is quite funny is to see first the scope of what Asia is doing globally and what Asia is doing for itself. And if we look at what Asia is waiting on the global scene, Asia market and segment is 28% of the global market. So it's quite big, to be honest. It's not yet at the level of, I would say, the ratio of population, because of course it's more than half of the global population. So at some point it will have to reflect into it. But right now we're already at 28, and it shows a little bit also this part that is going to grow for standard of life reason. But if we look at now into the actors, ASEAN account for 25% of global feed, of course, so it's a little bit below their market share, but 35% of project EPC. And for those who have been in the market, we are quite used to see projects starting in US, starting in Europe, and then going for execution in Asia Pacific, and it's still the case today. But if we reverse it, meaning that we look at ASEAN projects and ASEAN actors as ASEAN companies. First, what is quite clear is that the ASEAN contractors are, I would say, the best players of their region, of course, because about 3/4 of all the projects they are doing are directly, I would say, in their core market. But it also means that 1/4 of all engineering capacities located in Asia are to the export, and especially here to Middle East. We don't see a lot of ASEAN engineering working for Europe. More or less none of them working for US, for example. A little bit, but a shrinking part is working for Africa, and most of those export capacities goes to Middle East as of today. Now, if we look at the ASEAN project, of course, 70% are done directly locally by the players at FEED stage and EPC, but there is still 25% of projects which are located in Asia, which are done by European companies. It's quite an anomaly, but it's a stable part, stable fraction. It explains through different, I would say, reason, but the main reason is that, for example, if we look at ethylene crackers, you have to apply a license to do this kind of project, and of course, many licenses are owned by European companies. So as soon as you want to build this type of ethylene cracker, you have to take the license from Europe and apply it at EPC stage. So that's why we still see Europe having quite a pretty good and solid footprint directly in Asia, which is not the case of US, which is not the case of any other region. Now going to the project and to the country, sorry. If we look at India's specific situation, as we say, the total demand for energy in India is going to double. Okay, so of course it translates into project because the energy, if it arrives as a barrel, is not super useful. So you need to, of course, refine it, and that's why you see petrochem in red category here. It's more or less weighting 2/3 of all the projects happening in India, and it's rising pretty fast. You see the capex, okay, is going up. As Jack mentioned, there is a glass ceiling in terms of capacity of engineering, equipment, etc., which is, I would say, slowing down the development, but the pipeline is quite long, and the vision is already built up till 2030, which is quite unique for us in terms of project. And more or less what we see, but it's quite interesting that we see petrochem being really the robust part of Indian investment. We see on top of that energy transition. But then if you compare really in the figures of all this energy transition, is still lagging behind because, for example, there is more investment in India of coal power plant than really renewable energy. Okay, but what is quite interesting is that if we apply the Chinese model of development in terms of I would say speed in terms of project, we are more or less in the same pattern with India. So it means that here India is at the beginning of a growth, where today per year we are at the range of 30 billions of investment, more or less, but most likely in 3 years' time it will be 40, then it will go to 50, etc., and have this quite of a magnet effect to have a lot of development and self-development because the Indian supply chain is quite massive to be invested there, but there will be a ton of opportunities most likely more than really India can cover by itself. So it's going to be a magnet of investment of project for the whole continent. Indonesia is more or less in the same, I would say, not strategy but dynamic. Clearly, what is super interesting with Indonesia is that they are a producer of oil and gas. So they are restarting to reinvest in oil and gas after, I would say, a few years, especially before COVID, of slowdown. But since COVID, they are really starting to become more aggressive, and with another layer of petrochem on top of it, which was not really the case. We have published quite a lot of articles about those projects, but really interesting design of decentralized refineries, for example, for to equip more or less each island with its own little refineries. And of course, what is quite interesting behind in Indonesia is that it's a little bit the same effect as India, meaning that the population is growing and the standard of life is growing on top of it. So you have a double growth, I would say, in terms of energy demand and petrochem demand, but also with the capacity of Indonesia to produce part of its oil, which of course is always more interesting and less problematic as we see with the current situation. If you take in Indonesia, it's quite simple. You take 5 names, you have covers the entire market. Pertamina is, of course, the biggest player, but then you see Arbor Energy, Eni, Medco, etc. And those guys are doing most of the work. So if you want to jump there, okay, it's not 15 names you need to know. You cover 5 companies and you have done the work. So it's quite easy to enter and quite well, I would say, used to work with the entire planet as well. Now, if we go to China, China, as Jack mentioned, is slowing down in terms of investment. Why? First, because of course the total demand of energy in China is starting to slow down and arrive to a plateau. So of course, if you need to invest in project, and that's the case already with petrochem, there is overcapacity of petrochem production, and you see the price of petrochem sometime in China they are negative. I've not seen since the Iran crisis, to be honest, but what is quite clear that on the medium term, projects are not going to happen so much because there is not a need for pure addition of petrochem and pure addition of oil and gas. What is still needed is power gen, of course. So we see gas project being more and more done, and also a lot of renewable project, as Jack mentioned. But internally, China has already reached its peak oil. So of course it means that you are not going to build up a new refineries. You are not going to, I would say, build up addition capacity that is not needed by the market. There is another effect behind this plateau of energy demand is the rapid demographic drop that is happening in China, which is quite unique in the history of the planet to have such a shock in demography to pass from a population which is today about 1.3, 1.4 billion people to more or less half of that by the end of the century. So you can imagine the drop of population is of course quite linear with a drop of energy consumption because less people mean less energy consumption. And of course, it's hard to motivate people to invest in markets where you will see such a drop. So what is quite clear that it means that for the Chinese players and local players of the market, they need to go to the export. Okay, for a long time, the Chinese market was so large, so dynamic that it was, I would say, collecting all the interest of local players and also external players, but really focusing on the Chinese market. And now it's going to be the other way around because the Chinese market is going to slow down and is already slowing down for quite a few years. So of course, it means that you need to reallocate all your resources to focus on more dynamic region, like we mentioned, India, Indonesia, Malaysia, etc., etc. Here we have put up a ranking of operators and engineering. You see it's quite raw data because it's a pure export from Project Smart Explorer this morning, just to have read the latest pieces of figures and information. And on the left, if you look at the operators, you will not be surprised to see Pertamina being really the first player with more than 21 billions of investment on the next 2-3 years. Followed by, I would say, a lot of Indian, then Japanese, and a lot of, as Jack mentioned, nationally owned companies, which are, I would say, really the momentum of those markets. The only two, I would say, big surprise that you can really find will be first Total Energy, which is run quite well. I would not say, but of course, with the project they have in Papua New Guinea, it's a big part of their ranking. But you also see Exxon, which is a middle table. And why those two IOCs are, I would say, still in this ranking? Because those two IOCs were the only one that kept, I would say, their investment in petrochem. And of course, Asian market being dominated by interest in petrochem. If you are a Chevron, which is only upstream company, there is not so much to be done, I would say, in terms of project to those regions. Most likely, you are a supplier of the refinery that will be developed in those countries. If you look on the right in terms of engineering companies, you see that Technip Energies is doing very well. No big surprise. Technip is quite a global company, but still, you see that they are the first player in the region in front of GIC, of India Limited, Sinopec, etc., and many other players. Plenty of, I would say, new companies, also, I would say, local players, but also big boys, Technip, Caviar, McDermott is, of course, well placed in those rankings. But we start also to see appear Middle East companies like Mazda, which is in the ranking. So it's developing more and more, of course, a global interest. And for Middle East, it's quite interesting to invest in Asia Pacific because they're the first customers. So of course, as soon as you start to do project in those regions, it's a way for you to secure, I would say, your market and secure your customers directly. Going to the conclusion now, it's already point that we mentioned already, but just to refresh them and as a takeaway. First, what is really important to get about the Asian market is that there is is super divided in terms of energy demand profile. If you take Japan, South Korea, who have reached maturity, is quite stable, same as Australia, more or less. As the opposite, you see that China, which was the biggest market, is now shifting internally to a different scenario of energy demand evolution, I would say. And then you have the rest of the continent, which is starting to take this, I would say, stairs or escalators to massive growth of energy demand. Okay, so of course, from one country to another, opportunities are different, dynamics are quite different as well. No, the situation remained the same. Asia is the largest importer of energy, of course, because they are not producing a lot, and having such a population and such a development, of course, is driving a lot of demand for electricity and for petrochem. And of course, you need to import a lot of oil and gas, but not only, we still see a lot of importation of coal to support this growth of energy demand. Asian market is dominated by national companies, as we saw, but also with national engineerings. And when it's, I would say, international engineerings, those are using the local office, could be in Singapore, could be in India, could be in China, to support the local project. Okay, so if you are looking to develop yourself on those projects, it means that the decision centers has to be in India, or in India, sorry, in Asia. Okay, a lot in India, I have to say, a lot in Bangalore if you are visiting. Because it's such a concentration of engineering company that's becoming a key spot for all the project in the region and abroad as well. Right now, we don't see Asia really focusing in energy transition. To be honest, it might come later, but for the next few years, it will not be the main focus. Today, what we clearly see is that energy addition come first. Okay, there is a thirst for energy, and right now they're developing every type of energy they can for most of those countries. And maybe later on, we'll start to see phenomena of energy transition. The only country where it's really happening is honestly China in the region. The rest, okay, little by little in Japan, little by little in South Korea, but not to a great extent, to be honest. As a first slide, Jack mentioned Asia is the home of petrochem. It should remain like this, to be honest, for demographic reason, and it will be even more, to be honest, in the future. So if you're interested by those markets, that will be your area you need to play. And then if we go down to the countries, I think, for many years, not to say decades, China was really driving the region dynamic. And now we are at the end of this period and we see, I would say, the ball being passed to India. And we are starting the India era, if we might call it like this, where we are going to see such a burst in terms of investment, focus, etc. But of course, it means that we need to reallocate our resources to play better on those markets. And behind India, we see the rest of Asia more or less following the same pattern. If we take Indonesia, Malaysia, Vietnam, Laos, etc., and more or less taking off quite giantly to become a huge hub of importation of energy and consumption of energy. So of course it calls for more infrastructure, more projects to, I would say, welcome this energy, dispatch and use this energy as well.